Outside the Box, Inside the Markets. And I'm your friendly neighborhood host, David Prince. I'm with my dear friend, Jesse Martin, and this is our second official podcast. By the way, you can find us on all those wonderful podcast sites, most importantly, Apple, Spotify, you name it, you can find us. So, since we last chatted, we had earnings from NVDA. NVIDIA saved the market. Mr. Jensen Huang is probably the most powerful guy there is in the U.S. stock market and perhaps all of the markets throughout the world. We should probably talk about it. What do you think?
I think that's a good idea. Yeah, why don't you talk about last week, NVIDIA? You pretty much outlined it on Twitter and on the podcast that you expected NVIDIA to be weak into the number, and then for there probably to be a buy the dip opportunity if it continued the weakness after the number.
So up front, since this is our friendly podcast, I'm going to say, man, I called it so well. My execution wasn't great.
For sure.
So Jesse knows I really had a thought that, hey, everyone and their mother, excuse my dog, everyone and their mother is talking about this sell-off in NVIDIA that's going to happen after these great earnings. And I thought, well, earnings are going to be great. Like, you don't have to be bright to understand the AI theme. Excuse me, people. Let's continue to talk while I move this dog.
This is a common theme when you're with David every day. The dogs bark. And,
so anyhow,
wow, we got the dog on camera.
Let's think about this. I said, we know it's going to be a blowout report. And really, it's going to be excellent guidance. But the question is, do the institutions that are up 100, 200, 3, some are up 400%, are they waiting to make those sales till the stock goes lower? Like, why would they do that? So the week before earnings, I had a thesis that there would be some institutional selling to kind of reconcile books, lock in some profits pre the print. And sure enough, we had that, right? We traded down, Jesse, remind me, was it like 680s from 740? That sort of thing?
Yeah, I was thinking, 680s from 730 or so.
Okay. I think we got to a 746 high pre that. And we got that. And then the basic theme was, hey, it's not so easy to expect a sell-off any longer. In fact,
can I ask you a quick question? Just about, just for me and for the listeners, that you laid out that thought very simply. The institutions are going to sell into the number. Is there any more detail on like the mechanics of how that happens?
Yes.
Okay.
And it'd be so cool if we can teach people it. Use your goddamn brain. So there's a group of people. No, but seriously, that's what it comes down to. It's such basic logic, right? So you have all these people that understand how powerful this company is and how they're the complete backbone of what a lot of people, someone on the chat told me today that maybe society as we know it's going to be dead because of AI. That's how important it is. So if they're the backbone of it, and they're in only the second or third innings, third inning, we know earnings are going to be phenomenal, right? We know that I'm a bonehead and I bought the stock at 140 less than 2 years ago. After I bought it, it went to 122. So we know there's no way I'm the only guy. Then we know that I went to 200 and everyone was talking about shorting it, and 250 and 300 and 400, and they've had great earnings since. So there's been more time to buy the stock than I can imagine. Then you have 9 months to buy it between 400 and 500. That's a lot of time to build big positions. Then you have a market that on average goes up, 10% a year? So now all those people that bought between 400 and 500, some under 450, now have the stock at 750 pre what might be one of the most important prints we've seen in earnings history. Like, everyone was relying on this. The market looked like it wanted to turn over. So then it becomes, you have outperformed the market by fivefold, right? Market goes up 10% a year on average. And this stock is up 50% from where you own it. For some people, 60 or 70%. I ask you, because your job's on the line, you run a fund, do you, and all of a sudden this stock, instead of 10% of your fund, because it's gone up so much, it's 30%. Do you just, earnings are going to be great, so everything's fine? Or do you naturally say, I have to be responsible and take some stock off?
No, 100%. I would.
Right. And that's what Josh Brown and tons of fast money people, by the way, it wasn't so simple, right? Went high, but that's really what happened. It's just responsible money management where it ran so much that you do have to say, okay, I can't just leave it up to the gods. I have to think logically.
And also a lot of big money did catch the move, I guess is
Because there
what
was a lot
happened.
of time. There was like that base for 9 months. Sorry to interrupt, but it wasn't like so quick that most people missed it. This time,
Right.
there was a lot of time between that 4 and 500 to say, I'm staking my claim to NVIDIA. It's not the end. It's midway through. There's a lot more to go.
So I think that, I guess that's part of the key for me to remember with this stock versus a different stock, that a lot of people caught it. And when a lot of people catch it,
That's a good, yeah. Like this wasn't like, oh my God, I wasn't listening to that TV show that day, or I forgot to read that article in Forbes that told me about AI. It's the most predominant theme that had one of the longer bases. Jesse and I bought it at 498 as it broke out of that base because it was one of the better bases I had seen in over a year, if you remember that day.
Sure.
And in a matter of weeks, it was like 590 or something. I, like a schmuck, sold too soon 540s. But the point is that there was a lot of time to buy, right? And there was a clear buy signal for the breakout part of it. So it just seemed like a very natural, logical thing. We should probably go to where the kind of more thinking ahead, like having a plan and how that worked out and some of the guesswork on what it might do even on good numbers, if you want to get to that part.
Yeah. Are you, so
I'm thinking that how we just had a plan. If it went negative, we're pretty positive it wouldn't stay negative on the day. Unless you think there's another part we should kind of go
no,
through.
well, that's interesting. Then I think we'll talk about the day after.
Okay. Day after trade.
Well, no, the second day.
Gotcha. Okay. Yeah, sure. So I just wanted to mention that I had a plan with Inner Circle and Jesse I talked to all day. And it was basically, hey, now that the stocks come off highs, if numbers are strong, but more importantly, guidance, and I said this, I said guidance isn't about 24, but most importantly, 25. So you can look out and say, they're not going to we all know they have great growth, but do they decelerate at an unusual pace? Or can they take us through this type of growth through 25? And we got the answer. We expect to see not triple digits, but we're going to see really strong growth, which then said, okay, earnings were good enough. So I said, if we had ahead of time, I like to say if X comes out, then we can do Y and it should equal Z, that sort of deal. And in this case, I said, if that comes out, then red, you're going to want to buy it. And I remember saying 620 is the special spot, but bottom line, if it's red, it's probably going to end up the day green. Sure enough, I was a little too cute. Out of fairness, got to say it like it is. And it was 640 and I was about to buy some. I said, I'm going to wait for the 620s. And well, 620s didn't come and it was green in after hours. And we know how it traded the next day. But we had a basic theme that, listen, numbers were good enough. It'll be a buy on all dips. And then we go to that following day, that kind of muscle memory trade. Is that probably what?
Yeah, I mean, yeah. So for me, yeah. So the part of the trade that I caught because I followed you was, so the next day, so it went from 640 all the way, it kept climbing higher and higher after hours and over 750, which was a key spot a lot of people were looking at. And then once it got over that, it got all the way to, I think, 823 the next day. And then, for you come in the morning and I know that your focus is where can we find a spot to buy this? Because you're certainly not going to buy it at 823, but you want to, if not be in the stock, at least find a very tradable scalp. Or I don't know if scalp's the word you want to use, but a very tradable
spot. It was a large scalp or trade, whatever. It was short term, but offered a great risk reward, bottom line.
So yeah, I guess I'd like to hear you talk about your process on how you find that and if it's a little bit more feel as the day goes, and then how eventually you came on the mic on Inner Circle where you trade and you said it's gonna hit 775, and when it does, that's going to be our spot to buy it.
So to backtrack, first off, I needed to start to see a hint the trade might actually happen. And what I mean by that is at 800, it seemed like the momentum for the day was broken. Obviously a super strong stock, so I'd never say broken just for that moment, right? The fluff was off for a few moments. And I said, there's a good shot NVIDIA goes red on the day. And when it does, I doubt it stays red. And I, in fact, think I'll start buying as it goes red, which, as from my memory, was about 783. And I said, I'll start to buy there, but I think it can trade as low as 70-75, and that's where I'd have a full position. About a half hour later, it goes red. We start buying 883s, 880, and 770.
783.
783, sorry, 780. And sure enough, it goes 775. A few minutes later, it's 782, then 785.
Just to interrupt real quick, I guess because I follow you, maybe, and this is something you said to me, maybe sometimes I trade your ideas better than even you can, but you sounded pretty sure it was going to 775. So I think my first buy was closer to like 780, 50.
You waited a little while. Got it. Makes sense.
And then it kind of, and maybe yours was too. I'm not sure, but I'm pretty sure that's
it was a little higher, but it was like to be focused on it. And then under 780 is where I was focused.
Yeah.
To cut to the chase, within about a half an hour, the stock not only went green again, it went to 804. By the way, I was out. I was pissed I sold too early, but I think Jesse thought it'd be good to go through the mechanics of one, why we did it, two, why we thought 775 would be the bottom. Is that kind of what?
Yeah, for sure. And if it's something that I or the audience can learn for the next time, when a stock like this goes red, the strongest stock in the market, I guess, what about it even going, because you talk about going red and going green a lot, and clearly there's little tricks, if you want to call them tricks or whatever it is, or little patterns you see when stocks go red and green, and how it trades after that.
So the first part that I think is important, and if I say it out loud, I think you'll remember, is I always say after a momentous occasion, usually that's earnings, a breakout, whatever causes the move is almost only half the game. But then something moved a ton. You had a momentous occasion of a stock going up 10, 15, 20%. So that's the first part. That creates a lot of FOMO, whether it's someone who didn't buy it, whether it's someone who didn't buy enough, and it creates a lot of pain for people that are short, that are looking for a spot to cover. When does it pull back? So you have that group of people right there. I look at it as a group of buyers in my back pocket, right, that are going to help the action in a stock. And then I'd say the other portion that's most important is charts, right, and muscle memory. So on Thursday, before we gap towards highs of the day, yet again late in the day, which was the 780s, basically NVIDIA for an hour or two finally based in this mid 770s. It was about 774, 775. And it actually, for a day that was wild, I don't want to say it was boring, but it calmed down. And it found a very comfortable spot between, and it's not exactly 774. It might have even gone 773, 774, 776, but it really found a home if you go right in the middle at about 775. So I have that in my head. I have the buyers that didn't buy enough in my back pocket. I have the buyers that didn't buy any. Not only did they not make money, some of them might be embarrassed it's not on their books. And then there's that group of short sellers, for whatever reason, that just always want to fight the hottest stock in the market. They're all your buying power, right? So then you have a stock like NVIDIA that now tops out at 823. And you just start to do math, right? I'm not a mathematician, and I'm starting to look. I'm like 823, 875, 40 some odd points, $800 stock. Wow, that's like 5%, like that intraday. That's a big move on a large cap stock. That's not a common move. So is it likely it's just going to make it easy on everyone and go down another 5-10% to buy? No. 5% off the highs is intraday. That's a big level. Secondly, you have what's called muscle memory at 775. You have a real level of support where the stock is very comfortable holding from yesterday. And then finally, day two, you always, with hot stocks, you have that FOMO money. You have that real FOMO money. I didn't buy any. And then you have, oh my God, I was getting creamed on that short. It's finally off its highs. Am I going to go to sleep and pray it keeps going down, or am I covering my short? All three are buyers. So you put that level together with the buyers and then really say the number one stock probably in the world right now is NVIDIA. It's having a 5% off sale. Are people going to ignore it or buy it? They're going to buy it. And that's really, I know it's long-winded, but that's what's going on.
That all makes a lot of sense.
Buy
it. Yeah. And so some of this stuff kind of reminds, or it does remind me of poker, and it reminds me even of sports betting, like just a bunch of different factors all come together and they reach a point, and then that's a winning opportunity, basically.
You know what's weird though is it's a harder thing to teach, right? Because I'm not this amazing chartist. I'm not using some fundamental research that told me 775. It's literally taking a few pieces of a puzzle, because what I'm good at is reading emotion and how far things might go, or if they've gone too far. And it's like you said, putting together a puzzle that's a little abstract in how I do it, out of fairness, right? It's not like, oh, yeah, 2 + 2 is 4. So if you plus 1, yeah, okay. It doesn't work as clean as that.
There's a lot of feel that comes in too.
More emotion.
Because the problem is,
emotion.
Let's say you picked 782, and then, okay, now it comes in 782. I buy 2,000 shares. Now it gets to 775.
It's a gut check. How do you
down? Am I scared? Do I get back out when it hits 78? So picking that level, still that feel of that number was really the key.
I think it helps people. Like when I say that out loud, it helps me and other people know that you don't have to get the bottom, but it helps you on your sizing, or at least that's that's the reasoning, right? Is, hey, we're starting early because anyone that's exact in this business goes out of business. They don't make money. Nothing's exact in this business. So it's okay. If you're buying it at 780, then you sure as hell are going to be comfortable at 775, or you have no right to buy 780, because that's the spot where really, with some decent confidence, feel has the potential to go to. So it kind of, like you said, when you're buying something at 782, it's not always comfortable to be down 7. So now if you know your potential downside is 775, you can really think about your size as you're buying, and either not buy too much or wait to buy a decent amount till it gets there. And if it never gets there, okay, it's a winning trade with less size, but at least it gives you a roadmap. That's what tends to help people.
No, that concept is huge, and it was one that I had to learn, because, like I said on the first episode, that the first year and a half of me trading was pretty easy. You just buy something that,
buy high, and someone's going to take it higher.
You tell me or someone else tells me, and it just goes up. And that was pretty easy. And then once it turned into this type of trading, which is fun, but you can't just put all your size in the first level you see, because it can easily break through that level, and then you're. Okay. Well, I think that was, I learned a lot there. So,
hopefully everyone else didn't find it too wordy, and it's definitely something we do over and over. And I think, just to emphasize one last thing, the muscle memory for short term, for that big momentous day, usually does come into play. Day two is like, if you've noticed, Jesse, ENPH, Jesse knows there are a lot of stocks where day two is huge for me. We did it with SMCI. That pullback, the day after they pre-announced, it had exploded to 484. And basically, from, just to backtrack people, because we're on a podcast, I'm not just talking to Jesse. So SMCI pre-announces, and I say, hey, this is either a fraudulent company or we have to buy everything we can at 340. It goes in a straight line in 24 hours to 485. I'll never forget that, because I was like, wow. But the point is, It was day 2, and I said this should be very buyable. And it was basically looking back at how the stock traded the day before and where it could go. And that gave me a lot of confidence day 2 to buy that pullback from 485. So my point is day 2 after these monstrous moves can sometimes be, even though the move may not be as big, the confidence factor and where we'll hold and go can even be bigger. So day 2 is a big day for me. We did it on SMCI. We did it on ENPH. It's a big theme in how I trade.
I think, if I'm not mistaken, that's a really good segue, because didn't we also do it on the PANW short? Wasn't that?
Yeah, 1,000%. Like,
Okay.
how will people react day 2? So what Jesse's talking about is you had, at Palo Alto, the negative news of last week was, of course, their poor earnings report, and the stock was down, I don't know, nearly 25, 30%.
115, I think. It was 375. It reached the low of 260.
I mean, it's just got decimated. And it was up a lot today, obviously, that I'm sure we'll talk about, but later. But specifically day 2, after that horrible earnings report, the stock bounces from 260 right into the open. It's 274, 275, right? 14, 15 points in a straight line. And I go out and short the stock and buy puts pretty quickly too. Not right off the open.
Can I walk it back one sec?
Yeah.
So that morning, so after the earnings, you identified that the stock might have a little trouble. But I don't think we traded it much on day 1. That morning you came in and said, I think PANW is going to be a short today. And it was around 268. And I think this is kind of a habit that I have that sometimes works, sometimes doesn't. But I think I even put 100 shares short on just as a placeholder, just so I kind of had it up.
You wouldn't forget about it, right?
And, there's kind of 2 parts that we want to talk about. I know I interrupted you, but I guess what I was curious about before you continued was the dynamic of, you think it's going to be a short today, but you don't think it's going to be a short at 268. You're pretty sure it's going to go up, and then it's going to be a short. How does that come into play?
So what Jesse's talking about is it's like 9 o'clock. Sometimes I'll just choose to short something pre-market, or sometimes I'll wait till we get closer to the open, and we'll wait for the open. And basically what I thought of is this stock has just gotten creamed. The market the day before, the market is so bullish today because of NVIDIA's earnings, right? NASDAQ, everything is flying, that as we go into the open, we might hit our top of the day, right? You get all this order flow at 925 and then specifically 928. That short covering and massive order flow will probably get us close to our top, right? Is what I was thinking on a lot of stocks, but specifically one that I want to short. So rather than kind of guess, I thought, all right, it was killed yesterday. It wasn't just down like 50 points. It was killed. So if I miss it, I miss it. But there's a good chance with all this bullish momentum, it'll be another 2, 3, 4 points higher. I didn't know how many, right? I can't pretend I knew it was going to be 270 or 272. But I just thought,
I think 272 at least to start, I think.
So then all of a sudden, right at the open, it just screams higher, 274, 275. And that's where I was like, okay, I have a plan. And the plan is to get short this stock. Not forever, not because it's an awful company. It's one of the best companies in internet security with an amazing management team, but simply because there's a group of institutions that probably haven't finished selling their position, because day 1, when the stock's getting bludgeoned, they don't just hit bids. And there's a 3-day rule for a lot of institutions where after a blow up, they wait to buy it, right? A lot of institutions, when they see something, even though they want to own it, they just wait 3 days. I don't always believe in that. But so I thought that might stymie the buying that we already saw. Like, how many more points can it rally? So I thought, okay, if I'm going to short anything in the most bullish environment after NVIDIA's numbers, the one that got rocked off a fundamental reason last night or the day before, on a equivalent of a 6% bounce higher, seems like a very easy scalp short-term trade to me. That's what I thought in my head. I shouldn't say easy, but that's what I was envisioning, right? And sure enough, I literally think, it doesn't always work out. I thought we shorted 275, 270, 274, 5, did some puts, Sure enough, it went all the way to 265. And I think I covered all the stock. But by the way, it wasn't so simple because then it went back to 275.
Definitely
right?
wasn't simple. Yeah. But it was,
And,
I think, yeah,
and
these trades that you catch, and then I think sometimes what people trust you so much that then it goes back up, and they're like, "Oh, can we short it again at this level?" And for
and
you, it's not, that's not a magic level forever. It's just there's a lot of
right
market.
that first time, I always say like second, third time is never as easy. And I thought about that. I thought, I don't think it's clean, the stock, meaning more selling will come in. But I have stuff to do today in the market, and I don't want to be Palo Alto centric where I miss the entire market. So how can I best play this? So I thought, okay, I can minimize my risk by doing puts. It's back into that 275, 276, rather than worry about what levels next. It should come back into 270 or below yet again today, this week. Let's buy some puts. Tell me if I'm incorrect. I think we did 270, 250s.
I think so, yeah. But
The point is, so into that rally, so I didn't stare at it. I figure out what am I comfortable losing. I had a great trade short. I'm going to put on some puts. We did. They went up. I sold them too soon. I think I sold them when they were up 50%, but they went up 80% when then again the stock broke down again under 270. But I think what Jesse just thought is interesting is how day two, there's still something to do with that stock, even if you weren't too involved day one, because of how you can anticipate different institutions or investors might react. And it gave us a trade. Is it a big fundamental trade? No, it's a cute trade off of yesterday's big event. And it offered some great cash flow.
So that just really quickly, that 3-day rule, I assume it's not an actual rule. It's just like it's just a guardrail.
It's just a lot of people find that whether it be selling, whether it be volatility, they think that it takes 3 days to wring out all that excess insanity. A lot of times it's as simple as institutions just being out of positions till the stock kind of quiets down after these big blowups. And a lot of people that have been in the business for years just swear by it.
Right. But obviously so a big institution, it makes sense because they're trading a lot of size and they're trying to.
Yeah, I don't swear by it, but I'm not even close to a big institution. But yeah, a lot of people do. But just a lot of people who run mutual funds, even the fast money crew, you'll find a lot of people will talk about that. It's not an uncommon thing for people who've been around a while.
Got it. Yeah. And then I guess we can't talk about PANW today without at least talking a little bit about Nancy Pelosi and how she affected the stock.
Yeah, today was wild. So, and just for full disclosure, today after a further rally, like we had a great day on Palo the other day, today I looked, I said, this bounce is getting extensive. It's now like 26, 27 points into the 100-day. There could be a cute cash flow trade. We have tons of swings that are working. It was really a good day, and I was looking for new stuff to do, and I didn't see much, right? I don't see much actionable on the swing side or trade side. So I thought, this Palo Alto might be good. So I didn't take it too seriously. I just saw a nice cash flow trade. It worked, probably works again. We short some. It started off great. I covered a lot of my short up, I think 2 points right after the open. Like I short.
260. I think 269 to 267.
Yeah, it was like a nice simple. I'm like, I made a couple dollars. I'll hold some.
Right, or maybe
close to that. I'm not
289 to 287, I guess.
And I think even covered some like right under 287. I'm like, okay, this is nice, fun, cash flow. And then it bounces. I'm like, I'll do some puts. And then it just keeps going. I'm like, what's going on here exactly? And it keeps going. And now in the old days, I'd be like shorting more. Then just take a deep breath. And I said, I'm giving away some of the profits I made this morning. Okay, now I've given away all this morning's profits in Palo Alto. It was a good day and other stuff. I said, something's going on here. I don't really have a handle on it. I'm not Addy. I'm not going to just throw good money after bad. It's not working. So at least I'm trying to be responsible, and people.
Oh, that was huge. I mean, you could have turned it into a big loss if you said no. I know this one's going down. So
at 295, 296, all of a sudden, I'm like, there's big news, right? And then I think by 297, I see the news. It's this young lady named Nancy Pelosi has bought options in Palo Alto. Like, oh my God, I can't fight this woman. She's a stock killer. And what basically happened, and I told everyone, I said, listen, it doesn't matter if it's logical. It doesn't matter if you think it's stupid. All that matters is narrative short term. And the narrative is this woman bought NVIDIA, God knows how many hundreds of points ago, with options. Those options are up, God knows how many hundreds of percent or millions of dollars. And people are just going to go gaga. And this is going to create a squeeze. And I'm covering my short. And I have some puts. I'll hold on to those because I don't have much risk. They've gone down enough. And I'll just sit in them. But God knows, if anything, it's a buy. I didn't get smart enough to just say buy it. But I said, this is not a stock to fight. And the Nancy Pelosi trade, which a lot of people, again, might poo-poo. And I told Jesse it's worth talking about. Well, even if you only found out about it at 298, the stock went to 313 and was up over 10% at one time today. Is it insane? Sure. But if you're in the market to make money, sometimes it pays to not overthink, not care about whether something's logical, and understand what's going to work. In this case, at least, I helped it. I used it to prevent us from losing a lot today, right? Because it could have been pretty painful if we were adding and rode it to 313. Thank God under 300, I gave up. But it was understanding, hey, Nancy Pelosi is a big name on the street. Is she a money manager? Is her husband? No, but right now, it's like the most predominant running joke on the street that this woman has access to information other people don't and uses it to make millions of dollars. So will people run with this story and keep buying the stock, and will shorts get creamed? Yeah, most likely, whether it's a dumb story or not. And it happened. And I think it's just a good lesson in humility that whether you think the earnings sucked, whether you think the chart sucked, it didn't matter. All that mattered today was Nancy Pelosi. And if you're trading long-term, none of this stuff really matters. But if you're short-term minded and you really care about the move, it was respecting that this is an emotional move on narrative about a woman who's been getting a lot of play on the street, and respecting that those stories can take stocks way higher than we ever think.
And then you might not have an answer to this, or at least a direction on this, but I guess I'm just picturing someone listening. So one thing we didn't mention was that half of her buy was actually when the stock was 20% higher. And then I guess she doubled down after earnings, or whoever's trading her account did that. Do you have any feel for how the story plays out?
Yeah, no, I totally know where you're going with there. Yeah. So what Jesse's saying is, so if she bought it 20% higher, then why the hell is everyone so bullish and buying because she bought it now? Just so I'm on the same page.
I'm saying that.
Why would move the stock now? She's not perfect. Is that where you're going with it?
I'm kind of saying that. I'm kind of saying, and because of that, the next week or two of PANW, do people kind of sort that out in their head, and maybe it doesn't
come
turn
to
into
their senses? Yeah, probably. But the first part I want to answer is that whatever she did before, they don't know. They don't care. They only care about today's narrative, which is she bought it now. And even if most don't know about the first buy 20% higher, because they only know about what have you done lately, right? And if they do know about the first buy, they don't care because the narrative is Nancy bought it. She killed it in NVIDIA. So Nancy bought this, so it's going higher. Now, will over the next few days, the stock trade more like a normal company? This isn't a $2 billion small cap. And will people finally come to their senses and find a level that's more about fundamentals and charts and less about Nancy? I anticipate, yes, that it will normalize. But for today, it became a story stop.
Okay. Yeah, I think that's important for I think people probably want to hear that opinion too. So that's good.
Yeah, I don't think it's the new GME normalization where we don't talk about Nancy in reference to Palo Alto probably does ensue from here.
Today, it's Monday, February 26th. We have the PCE coming up on Thursday. And I'd love for you to talk about your plan for that. I know you put you added to your IWM position today when it was green, which is always something I noticed that when you're adding to a position as it's going up, it's something I take note on. And yeah, I'm just curious how you're thinking about the rest of the week. And
Okay.
I know you've talked about a little bit of a rotation possible coming up. Yeah.
So my basic theme, right? And it's important to say, late December, my theme was this. This is what I potentially know. What do I know? I just can say this is my best guess on where I see the first quarter, and it was my two favorite Mag 7 stocks are NVIDIA and Amazon. My favorite sector, and it's always about risk reward for me. My favorite sector risk reward is biotech, XBI. And Bitcoin, I wouldn't get in the way. It's got a really good chart and it'll keep consolidating, make a new high, consolidate, make a new high. So we're basically positioned for that, right? You don't hear me say IWM in there. And it's eventually will, because we had an amazing trade where we were really long aggressively IWM off of a Fed meeting where we saw the most dovish Fed we've seen in a while. But by 205 with some hot economic numbers, we were out of IWM and haven't done much with it recently. For those that don't know, it's the biggest followed small cap index, the most well followed, I should say. Anyhow, so today what Jesse's gearing at, I got lucky. I had Mara as my Bitcoin proxy, and Mara had a insane move today. Mara was up 22% because Bitcoin, after basing, which I was kind of bullish on that base between 50,500 and 52.5, I kept saying, hey, it's setting up for a much bigger move. Little did I know, Monday, today, it had a massive move up 5%. Sure enough, my Mara was up huge, so I get flat Mara. Immuno, lead holding of ours. Our recent buys down at 7, but recently we were buying at 20. It was 25. Trim some Immuno. I'm getting to a point here. SMCI, it was weak last Friday on a convertible debt offering. We were able to buy some 850, 840, 830. I think it traded as low as like 824. I don't remember the exact low, but we were buying. And then it would bounce. We trimmed, but we went home long. This morning it traded as high as 890. Trimmed some SMCI. So here I am. So a hell of a day. By the way, on top of it, ENPH, which was a recent position after exiting 132, we started again, 122. And 118, 119 into the 50-day. This morning it's back to 122. Trim some ENPH. So now I'm trimming a bunch of winners. It's a nice day. What the hell do I do now? And I just thought, well, this weekend I had done some work. And as March begins and we finally get through this Fed meeting, which originally was supposed to be the beginning of rate cuts, where there won't be a rate cut, we can actually look past that meeting and start to see a meeting where there is a very, very good likelihood we get a rate cut. Now, can we count on it? No, it's not like maybe that previous thought that there's 5 cuts, 6 cuts, and you can rest assured it's coming. If we're going to get hot numbers, eventually they won't come. But I have a good inclination in my best guesstimate that it will come. So I always thought it was a matter of the calendar to get more re-engaged with small caps. Now I want to go a little further. XBI is in essence small caps, just biotech, right? And it made a new high last week. It made a new high today, yet again, on the year. And it's up over 10% in a very short period of time, from 87 to close 97.33 today. So I just started to do the math in my head, and I thought, well, we know Wall Street is a forward-looking mechanism, right? That's all we do is price things. So the closer we get to this Fed meeting where people can start to point to the next Fed meeting, even without like empirical proof that the economy is slowing and we're going to have cuts, then maybe small caps can work too. And then moreover, because now we have the greatest divide in performance. We have never seen the small caps underperform large caps in the history of the market since IWM's been created like they are now. I'd say 90% of that is because we're going through a revolution with AI, but for whatever the reason, its underperformance is dramatic.
For sure.
We're getting closer to that Fed meeting. I've taken a lot of profits, so I either could sit on cash or I can look at something that still might really have a decent shot at risk reward. And then finally, we have a number, we have a catalyst. Now, can the catalyst turn out to be a painful one? Absolutely. We saw a hot PPI, CPI. It doesn't have to be a friendly market number, but we keep looking past hot numbers and going higher, right? Especially in big cap world more than small cap. And when we do get a bullish number, we run, right? So I just thought, if there's a time to add some exposure on strength, it's today. Part of it was I got a lot of busy. I got busy selling ENPH and selling Mara and things like that. So when it was not up today, I missed adding to it, to be quite frank with you. So I looked at it and I thought, well, if I think this trade's really going to work, do I care about 200 or 201? Not really, right? So I thought I have to add exposure. But as I did it, I said, listen, hot number on PCE, you're not going to be happy. This could be 197 and a tick. But as I look at the market today, do I see great risk reward in the Qs? No. Do I see great risk reward in SPY? No. Do I see great risk reward in buying XBI that we were buying under 70 a few months ago? No. Like, do I see unbelievable risk reward in Immunome that we bought 12 weeks ago at 6? It's at 25 now? No. So I'm simply like, they're all equal to me. Where's my best risk reward? And I started to realize it really probably is IWM. So even if it doesn't work, I'm willing to be in it because we're getting closer on the calendar. Bitcoin is friendly to IWM. Bitcoin says risk on, right? Bitcoin, no matter if you're like a Bitcoiner who, the whole use case and all that stuff, it still says risk on. What's more risk on besides Bitcoin? God knows, IWM. Small cap companies that are often not profitable, that rely on debt. So when you put the whole picture together, I'm a bit confusing because I think a lot in my head, but it's one of those puzzles. It feels like maybe it's finally time. Now, some other people I know, thank God not me, there's other things I've tried like BABA, that every time I think it's about to finally go, it doesn't go. I haven't been part of this IWM's about to go for the last month. A lot of people keep getting burned. I'll accept it if I do, but it feels like I've waited long enough. It's worth a shot. All the signs are there. And I don't know how to explain it any better. I think XBI is a great example of how sometimes Wall Street's looking ahead. Maybe it just happens before we get a soft CPI or PCE. And by the time it's through 205, am I going to be excited to chase when I could have bought it at 200 and built a real position down here? So I know my risk, 197, then I can even go 190. And I thought this is a good time when I look at where can I make money? Where do I see the most upside? I mean, could IWM on a breakout through 205 go to 230s? It really can. It's a pretty good return for an index. So that's kind of where I'm thinking. And the basic template is I actually think it's time for a rest in the market, right? The buy high, sell higher is going to get tired. I think a lot of chasers are in NVIDIA. Not that NVIDIA is expensive. It's trading under 30 times earnings at its growth rate. It's still kind of cheap based on numbers. But my point is I think there's a lot of people in the SMCIs and the NVIDIAs, just even in the Qs, that are just buying. They don't really have strong hands. They don't really believe up here in what they're buying. So I think on any pullbacks, it could get a little dicey. And then what I'm looking for is, does the whole market pull back, or is it a real rotation where small caps have some leadership? Just like we've seen in XBI, we saw financials trade really well all year, kind of undercover. As everyone was talking about NVIDIA, Goldman Sachs has gone straight up. Citigroup's not having a bad year. So that's what I'm wondering. Either does the whole market come in, or do small caps take some leadership? I'm willing to expose myself to that and at least take a shot that maybe it's time for small caps to have a little bit of outperformance. That's kind of the way I'm looking at it.
Yeah, that sounds like a great explanation to me. And for anyone at home who isn't staring at the charts every day like the traders are, if you just look at IWM, and then if you look at let's say a 3-month chart of IWM and then look at it on SPY and QQQ, you'll kind of get a visual explanation of what David was just talking about.
Of how people really don't seem to care and how it drastically underperforms, and how if it were just to play some catch up, it could be a wonderful opportunity for even a 5-7% move. It doesn't have to be humongous, but it's really been left in the dust.
But
now, a lot of people say for good reason, but I always look at things and say, well, I remember when everyone said it was a bear market rally. I've said this a few times today or on some other podcast or something. I said, I remember when the NASDAQ rallied hard, like I remember being very aggressively long and thinking January of 23 would be a great month. But then everyone was talking about it's a bear market rally. And that bear market rally turned out to be a bull market because it turned out the market usually knows in advance of us what's going to happen. There wasn't a recession and the market knew. So what happens if we sniff some of that out now? Okay, we know we're not going to have 5 rate cuts, but there will be rate cuts because the Fed at some point wants to get a little bit more normalized. Maybe we're not going to 2% and maybe we're not going to have 5 cuts, but they also think things are a little tight here and they want to loosen up. So I don't see why the market may not sniff it out in advance, right? And have some of these moves before we get the evidence that they're supposed to have these moves. The market usually moves ahead of the evidence, right? Like a lot of chartists, I'm not one, like to say price usually smells it out and dictates the news you're going to hear the next day. Hoping that happens. Might be dead wrong. We'll see.
Well, yeah. So we have a binary. I guess you'd call it a binary event on Thursday.
Yeah, definitely. The funny thing is we've had some other binary events that stocks have ignored, which was why I feel I have to add to some risk. Because what if it is a hot number? Right. By the way, the PCE, for those casual listeners, is the Fed's, I feel like cliche here, but it's the Fed's preferred gauge of inflation. But it makes sense on why it is their preferred gauge, and they take it quite seriously. And given that we've had some hot numbers, you'd have to assume a weak number, a soft number, would be really bullish. And hell, they keep buying even hot numbers. So it kind of puts me in a position where I better add some risk on. Am I adding Bitcoin? No. Am I adding Mara? No. Went up huge. So this seemed like a good risk reward.
So it's a binary event with the extra out that maybe they'll ignore the side that could have gone against.
Or any downside for me offers the opportunity to average into a larger position. I definitely am not a home run hitter, meaning I wait for my spots. And if they come, I'm willing to go for that home run. But I'm not that aggressive guy who's like, I'm going to be right and it's happening and the PC is going to work out.
Right.
I don't have that confidence, not as an economist, nor from what I've been seeing. The evidence is the economy is holding up. So I'm like, all right, I'm going to add to some risk. So if we do run away, I'm in it. And you know what? If the PC is hot and we pull back, I'll be perfectly comfortable adding because, again, the calendar suggests to me it either plays catch up or we're about to have – here's the good news. Though I always look at all of it as one pot of money. If we finally pull back and they even IWM goes with it, good. I'm sick of buying things that are going higher. And now that you have a Mara working, right, it's one less stock on the table. And now that Immunome's up 300 some odd percent, it's one less stock working. And I don't want to buy the Qs up here. So it's kind of like, for me, I'm not trying to be silly because I'll lose some money in IWM, but it becomes a win-win because I'll find a better buy opportunity with a pullback if everything pulls back. So I look at it as, okay, going up, I'm going to win. And if we pull back, I'd actually prefer a pullback in the market, as you know, of like, I'd love to see a 7% pullback, see the VIX spike a little bit, see some fear. It would definitely level the playing field. It's gotten just a little fluffy out there.
Is there anything else relevant for this week? Or I think we got a lot of content in.
We did. I just wanted to say Bitcoin was something I had been bullish on. I had mentioned it on Twitter for those of you who are listening. And it just reinforces these tight formations traders look for. It doesn't matter what commodity or index. People love tight because they tend to produce outsized moves. And, well, we had a really tight Bitcoin formation for about a week where 55 to 52.5 back and forth, and it's about to go, and then it's not. And then bang, today it breaks out of that really tight formation and it's up 5%. So just a reminder to always look for those on things you're excited to buy because they usually provide outsized gains. Now I think we'll slow down into 55,000, but it did provide a great trade in any of the proxies or Bitcoin itself. And I know we got a lot of fun stories we want to share with the listeners next week, so we'll save some of those. I think some personal stories about our past and so on.
Yeah, I think a segment that we'll start it next week instead of this week is just I'll tell either probably a poker story, a gambling story from the past.
At least with someone famous we've all heard about, so we can ooh and ah or no.
Probably, yeah.
Cool.
I'll try to use I'll try to use all those tricks and the big names and all that kind of stuff.
Hey, I mean, I'd like to hear about it.
Yeah,
I think I know this guy who played with these guys.
And then I think David will tell either a story from his old club days or maybe from his early days of investing, where he had a lot of different things going on back in New York City.
Sounds good.
We're looking. We don't have a name for the segment yet. Club stories was one of them, since the clubs in the poker hand, but
some good ones.
We don't necessarily need a name, but you guys can look forward to that coming up. We'll have planned out stories for the end of the podcast.
All right. Thank you everyone for joining us. Again, I'm getting used to all this, so if my terminology is off, please forgive me, but we are on all the major podcast medium, including Apple now. Thanks all for joining us. I'll let you sign off, Jesse.
Yeah, thanks a lot. This is it's kind of a vision that's come together after 2 years, and I'm having fun. And the cool thing for me is I get to learn from David, and I get to ask him questions that I do get to ask him during the day, but the trading day is hectic, and I kind of get to hear a little bit more granular the stuff he thinks about, and hopefully you guys enjoy hearing that too.
Thank you guys for listening. We will see you next week.